This video, I'm going to talk about the basics of the TTM Squeeze and how to use it to make money. Hello and welcome back. I'm Dr. Bo with Ready, Set, Grow. On this channel, my goal is to share tips to help you on your financial and trading journey. If you're new here, like and subscribe. Leave a comment below saying you subscribe for a chance to win a copy of my 2021 day trading planner. Also check the description for some valuable resources. What is a TTM Squeeze? It is a study that shows when stocks are in a period of consolidation. In Thinkorswim, you can go to studies right here in this corner, click on studies, edit studies, and type in TTM Squeeze in the search bar, double click, and you can add it to your chart that way. And now it will show up on your charts. Now you see that the TTM Squeeze indicator is at the bottom of my chart. This indicator consists of a series of red dots and green dots. The red show that a stock is in a period of consolidation. So you have red dots here, the market is quiet, and then we have a release of energy. Red dots here, market is quiet, this means we're in consolidation, and then we have a release of energy. Green dots show that the stock is no longer in consolidation. When we see the red dots, that's what we call a squeeze. So I can say that this ticker, DraftKings, was in a squeeze at this moment in time. DraftKings was in a squeeze at this moment in time. So whenever you see the red dots together, that lets us know that the stock is in a squeeze, which means it is consolidating. The first green dot that appears after the red dot means the squeeze has fired. And when a squeeze fires, we should see a greater than expected move in one direction or the other. Looking at DraftKings, we have a squeeze right here. The first green dot, that means the squeeze fired, and we have a move in one direction. That's to the upside. We have a squeeze right here. We have the green dot, that means the squeeze fired, and we have a burst of energy releasing to the downside. To recap what I just said, red dots means in a squeeze, green dots mean it fired. Now let's look at the oscillator bars and what they mean. The oscillator bars represent momentum. Light blue and pointing upward is bullish momentum. So we have all this bullish momentum here. Dark blue means the bullish momentum is weakening, so it's weak bullish. The red momentum bars pointing to the downside is strong bearish momentum. And then when those red bars turn to yellow bars, that means the bearish momentum is decreasing. Why does this matter? Well, as a trader, we want to position ourselves to capture greater than expected moves. When a stock is consolidating, a trader can take advantage of the low volatility and low prices and hope for a greater than expected move and catch that move early. Let's look at a few examples. This is low, LOW. It had a 4-dot squeeze right here, and then it fired. The first green dot following the red dot means it fired. You could have taken a position here and wrote it up. We have a 1-dot squeeze here. It fired, and it took off, a release of energy to the upside. Here is another example, NIO, N-I-O. We have a nice squeeze here. That's a period of consolidation. It fired to the downside, so you could have taken a position here and wrote it down. Has another squeeze right here in this area. It fired long, and you could have taken a long position and wrote it up here. You might be wondering, how do you know which direction the squeeze will fire in? The squeeze only tells us that there is a move that's going to happen. It doesn't tell us the direction the squeeze is going to fire. This is where you use additional indicators to help you identify a possible direction if you were to take the trade while it's in a squeeze. While there are many indicators that can help you guess the direction, I'm going to talk about two. One is exponential moving averages. Go to studies, edit studies. I'm going to type in MOVAVG and click the one that says moving average exponential. Double click it to add it. And I'm going to add this 5 times because I use 5 moving averages. You can use whichever moving averages and however many you want to, but I use 5. So I'm going to add this 5 times. Once you have double clicked on the number of moving averages you want to add to your chart, you go here, you double click on them to edit the parameters. This is where you would click in the specific moving averages that you want. So I know I like to use the 8, so this one will be the 8. You also want to edit the colors so that you can differentiate between the moving averages. So I'll leave this one light blue. I'm going to double click this one, and this is going to be the 21. I'm going to change the color here, make this one pink. And you repeat this for all the moving averages that you want to add on your chart. These are the moving averages that I use. I use the 8, the 21, the 34, the 55, the 89. I went in and edited the parameters and changed the colors so that I can differentiate between each one. I'm going to hit OK, and then they will pop up on my screen. Okay, the different moving averages are on my chart, and how we use these is if the moving averages are stacked, that means the 8 is on top of the 21. The 21 is on top of the 34. The 34 is on top of the 55. And the 55 is on top of the 89. That is stacked. If the moving averages are stacked and price action is above the 21 EMA, then I could say this is a bullish trend. Looking at this ticker, UNH, the moving averages are stacked positive. This is my 89. This is the 55. This is the 34. This is the 21. This is the 8. They are stacked in order. Therefore, I can deduce that UNH will continue in this upward trend. Here is an example of the EMA stacked negatively. For ticker AMD, we have the 8 EMA here, then you have the 21 EMA here, the 34, the 55, and the 89. So they're stacked in the opposite direction. This leads me to think that if the squeeze was going to fire, it would fire in a bearish direction. It will fire short because the EMAs tell me the trend is bearish. Another way to add edge and increase your probability of success is to use the TTM Wave. Click here on Studies, Edit Studies, type in TTM Wave, double click it, apply it, and OK. And we can add the TTM Wave to your charts, and that'll also give you a sign of what direction or what trend the stock is in. I have the TTM Wave here is at the bottom of your chart. The TTM Wave consists of oscillator bars. The TTM Wave shows the longer term trend. If it's light blue and pointed upward, that's bullish. Dark blue means it is weakening, but it's still above the zero line, so it's still bullish, just weaker bullish. Once the TTM Wave goes below the zero line, then this is a bearish outlook. If it's light blue and pointed below the zero line, then it's strong bearish. Once it turns dark blue, that means it's a little bit weaker, weak bearish. Above the zero line, bullish. Below the zero line, bearish. Here is an example of a trade I actually took today not too long ago. This is AMAT, A-M-A-T. The first thing I want to see is if we are in a squeeze, and we are. Here are the red dots here that let us know that we are in a squeeze. There is no green dot, so the squeeze has not fired. With this trade, we had to determine which way the squeeze is likely to fire in. I checked where the EMAs are. They stacked? Is the 8 on top of the 21? Is the 21 on top of the 34? Is the 34 on top of the 55? All of the EMAs are stacked positive, and price action is above the 8 or 21 EMA. That gave me a clue to take this position long. The second thing was to look at the TTM Wave. It is light blue and pointed upward. That is a bullish sign. So these two clues led me to take this position long. It is still going up. So I did enter AMAT, and I made a very nice 20% gain on 20 contracts that I had. Here is another ticker that I played this week. I alerted it in chat and we made some really nice gains. APPS. First question, does it have a squeeze? Yes, it has a squeeze. If it doesn't have a squeeze, it's not something I'm going to trade. Second question, are the EMAs stacked? Well, we see them stacked right here. Third thing, is the TTM Wave bullish or bearish? The TTM Wave is pointed above the zero line. While it is dark blue and losing momentum, it was still a bullish trade. We took it earlier this week and was able to make a very nice profit on it. I entered and exited this trade already, but this could have very easily been a swing trade because it still has not fired yet. So if you got a position 30 days out or more, you could have swung this and waited for it to fire. But the market has been really sketchy lately, and I didn't feel comfortable swinging anything. So I get in when I see the squeeze and it meets the criteria, and I exit when I make a decent profit. When you're looking to enter trades using this indicator, you would like the price to pull back to the 8 or the 21. Ideally, that would be a good time to enter. I go over exiting these trades in another video. You can use ATR, you can use the FIB 1272 extension, you can use the momentum bars. There are a variety of strategies for you to use for exiting, but definitely check out one of my other videos where I go over that. Let me do a quick recap. Number one, look for red dots. When you are going through your charts, you can use the daily, you can use the 4 hour, you can use the 2 hour, you can use the 1 hour. Those are the time frames I use. I don't use anything less than the 1 hour. But if you are a scalper and you wish to use it on the smaller time frames, give it a try. But look to see if there are red dots. If you don't see any red dots, then there's no trade. Next, check that the EMAs are stacked. They can be stacked positive or they can be stacked negative. That gives you an idea of which direction the squeeze may fire in. Number three, check your TTM Wave. It should align with the direction you're thinking about taking. The TTM wave pointed up is bullish, pointed down is bearish. Choose an exit strategy that works for you. You can use ATR, you can use Fibonacci extensions 1272, or you can pick any other strategy that you normally would use. That's going to be it for this video. If you have any questions, please post them in the comments below and I'll be sure to respond. Also remember to let me know that you subscribe to my channel for a chance to win a copy of my 2021 day trading planner. Next week's video, I'm going to be showing you how to scan for squeezes. That way you can identify tickers that are in a squeeze for possible trades. If you're looking for an active trading community with an impeccable track record for high quality alerts, check us out on Discord. The subscription fee is usually made with 1 or 2 of the alerts. Thank you all for watching. See you next time.